Consumer confidence took a big hit, according to the University of Michigan on Friday. Truflation has expanded their blog quite a bit to include some forecasting. They have a shocking forecast for the rest of this year. Wait till you hear. Pressure is building on Elon to advertise again. Well, no, pressure is building on Elon again that he should advertise. Got to get those everything right in that sentence in order for it to make sense. Debate is also raging on stock buybacks. We'll talk about all these things as we progress here today. Listen, this is Randy Kirk. I'd love for you to hit like. You know how important it is. It helps to support the channel, even if you are unable to support it through Patreon. That is a great way to support, is to watch the shows, then hit like, subscribing and notifying. All those things help. Commenting. Did you know that commenting helps the channel? So as many of those things as you can do, that's going to be just fantastic. So I'm going to tell you exactly what I want Tesla to say on Wednesday. That's what I'm going to do tomorrow morning. I have a list of things I'd like them to say on Wednesday that they could potentially say, and that would help me get to my 300 projection by the end of the month. I need them to say some of those things on Wednesday. Anyway, then tomorrow there'll be no midday video because you guys will all be watching football, and so will I. And then, of course, tomorrow night, my number one show, almost every week, the number one show of the week is, well, number one of the news shows, if you will, is the Monday morning show, which occurs on Sunday night, which gives a financial week review in advance. And I think I think there's a good reason for that being as popular it is. All right. So here are the numbers. The University of Michigan gauge of consumer sentiment fell to a preliminary October reading of 63 from 68.1. That is the lowest level since May. Economists polled by the Wall Street Journal had expected it to be still up at 67.4. Another part of that analysis that they do is they get a measure of inflation expectations from consumers. And according to this report, Americans' expectations for overall inflation over the next year jumped to 3.8 in October from 3.2 the prior month, the highest level since April. So if people are anticipating that inflation is going to reignite, now, what could have caused that? Oh, gasoline prices at the pump? Maybe. I don't know. Anyway, if people are expecting inflation to reignite, then that would, of course, hurt their expectations in terms of their overall well-being in terms of the economy. Anyway, expectations for inflation over the 5 years rose to 3% from 2.8% in September. All right. Now, you guys all know my position on inflation. It's very, very clear. If you're a regular watcher, I believe inflation is dead as a doornail. I believe it has to do with productivity as well as some other things. And that there's no chance that there's going to be any uptick in inflation. Now, the year over year thing, sometimes 1 month or 2 months, you can see an uptick that has nothing to do with the actual reality. Looking at the month by month, looking at what is the month over month numbers, looking at the last 3 months, the last 6 months, way more instructive. And I think that the Fed understands that. Now, I've got some other folks that agree with me on most of this. Truflation has been saying that. The CEO of Costco says so. Paul Krugman even came in yesterday and said, nope, I think inflation is over. It's done with. We can move on. So, but what if I'm wrong? What if those consumers in the above story are onto something? How would it change the overall narrative? Where would inflation come from? And how much are we talking about? Well, Truflation's website is now adding stuff every month. One thing I've been hoping for is that they would do some more analysis with the numbers. And they had this blog, and they were doing a tiny bit of analysis, but not really any thorough analysis. Well, my hopes have been realized. Their October blog post gave me a startle. Are you ready? Sitting down, prepared? They are predicting 3.5 to 4% inflation at year end. Now, what was unclear here is whether they're talking about that's what the CPI will be showing, the CPI report, or what they will be showing. They never said this. Well, that would be up from what they're currently showing is 2.5%. I just don't think this is going to happen. I don't see this jumping a full percentage point or more by the end of the year. Now, they might be talking about the CPI print as opposed to what trueflation is going to show, but they don't say that in their blog. So, but they do spend a lot of time reviewing all this, and they do have resources that I make no claim to have. So let's take a look. They start out this way. Trueflation's real-time U.S. CPI index paints a mixed picture of what's coming up. Having risen from a low of 2.1% on August 12th to 2.66 on September 27th, the index has since retreated to 2.46. So you go all the way back to June, it's been right in this range of 2.5, maybe 2.6, maybe 2.1, et cetera, et cetera. It's been in this range that entire time. Despite this, they say, we maintain our year-end projection for inflation of 3.5 to 4%, well above the Fed's 2% target. Anyway, so I suspect that even if this is true, the Fed may not raise rates anyway. We pretty much know they're not going to raise them in November. Nobody thinks they are. I don't think they're going to raise them in December or January either, because I think they're going to say, look, we need, and of course that depends. What are they seeing in terms of momentum? What are the things that are causing the upticks, and what things are causing the, so all that's going to matter. I don't think they're going to raise rates. I don't think they're going to raise rates. I think they're also going to think, hey, a lot of what we've already done, we need to now see what is the impact over long term. But Trueflation goes on to say, while goods prices have fallen on the back of lower vehicle prices, costs in the services category remain stubborn. The costs being higher in the service category, combined with the tight labor market and the impact of interest rates on household expenditures, supports their year-end projection for this headline number, 3.5 to 4. So just to be clear, this is the headline number, not the core number. So you'll see that a lot of their expectations have to do with oil prices, and that's what comes up next. Currently, inflation is primarily driven by higher oil prices, which feed through to utilities and gasoline prices and affect the overall costs of services, also goods. We expect oil prices to remain elevated in the short term as a result of the OPEC production cuts. It's not just OPEC plus production costs, but it's really the Saudis and the Russians. So that was a little bit of a thin explanation here, as well as the recent Hamas attacks in Israel. That's not really having any effect on oil prices at all, which has already caused another spike in prices. No, that is not what caused the spike in prices on Friday. That was caused by the Biden administration deciding to fine a couple of oil tankers that were carrying Russian oil. And it happened exactly at that time. The deal in Israel with Hamas had been going on for a week, almost a week by that time. No, this was all to do with the Biden administration's decision at that time to hike these or to go after these two tankers. All right, so this is all dated. And by the way, oil prices have been dropping dramatically from a high of 95 to down to 83 over the past week. Now, they did jump up $4 or $5 on Friday. It'll be interesting to see what happens next week when people have kind of settled down about that decision by the Biden administration. All right, so very few, but regardless of oil, nobody's expecting gasoline prices to increase. Gasoline prices at the pump increased because the spot market increased as the oil price was going crazy up to 95. But the futures, no, gasoline futures have stayed low. Why? Because there's tons of gasoline in storage. Lots and lots and lots of inventory. Anyway, there's a lot of nuances. They do in their next report, their next analysis is on the job market. And I like this section here. There's some nuances here that I had not seen, but they also made a couple of mistakes. The continued tightness of the labor market is one factor that can force the Fed's hand on another interest rate hike. September's jobs report revealed that the unemployment rate held steady at 3.8, while the economy added a whopping 336,000 jobs, nearly doubling what economists had expected. The biggest gains came from leisure, hospitality, government, and healthcare sectors, and then they never mentioned that these are all part-time jobs. All part-time jobs, 3 months now, 3 months. All of the increases have come from part-time, not full-time. They don't make a mention of this. That's a very critical. That's how it was possible for you to add 336,000 jobs, only add 90,000 workers to the entire into the workforce, and keep the unemployment rate steady. Otherwise, the unemployment rate should have probably dropped to 3.5. All right. However, signs of softening are emerging here too. August marked a 30 basis point increase in unemployment from 3.5 to 3.8, which reflected a 736,000 increase in the labor supply. In turn, this larger pool of available labor put downward pressure on wage growth. Indeed, there's already begun to, wage growth has already begun to tick lower to 5.73% year over year in August. This is consistent with broader wage measures that show easing price pressures, including the Employment Cost Index, the Indeed Wage Tracker, and the Atlanta Fed's Wage Growth Tracker. All of those are showing that wage pressures are reducing. In addition, layoff data published in Truflation's live labor data stream shows that the number of job cuts has tripled from 23,697 in July to 75,000 in August. Similarly, I can't say that. DailyJobCuts.com shows that the number of job cuts has doubled between July and August, and this is evidence that the labor market is finally beginning to cool. I called somebody to ask them what was happening there with a major company. And I asked them, what's happening at your company? Just to get a little flavor for something, because most of my relationships are with small companies. This is a really big company. And the result of that text back and forth was, yeah, we're hiring a little bit, but it's way less than we were. And there's no rush. There's no concern that we're understaffed at this point. So Truflation's Consumer Confidence Index has also fallen for the second month in a row, down from 94.5 in July to 89.7, 5-point drop. The index of consumer expectation is also down from 106.8 to 104.2 in September. This drop in optimism reflects concerns over rising grocery. We don't have rising grocery prices. Anyway, over concerns over rising grocery and gasoline costs. Oh, they even say it, though food inflation continues to slow. Is also consistent with the recent dip in labor market conditions. All right, once again, gasoline spiked on the spot market. Futures are low. Prices at the pump are down and expected to continue down because there's plenty of inventory. So I don't know. This is the places where it's a little shaky. The main drivers of inflation are persistent wage growth, higher oil prices, and higher material prices, although they never go in to talk about material prices. I've looked at the Truflation commodities prices, and materials are basically down. Consequently, the categories with an upward impact of inflation are owned housing, gasoline, no, vehicle expenses, which are coming down except for some. Well, we'll talk about that in a minute. Prices in the service sector are also holding steady. Now, that we all agree on. So, in the housing category, price increases have been driven by owned property. Yes. The latter is one of the main contributors to September's CPI, up 0.31 month over month. Okay, so that would be 3.7 year over year, almost 4% year over year, and the 2.9 is the year over year figure. But if the 0.31, if that was going to continue, would give us a 4% year over year. The strong price trend comes despite several factors that should, in theory, cause a decline in prices. Firstly, Truflation's live housing data stream shows demand for new homes is continuing to drop. According to the National Association of Realtors, the total number of existing home sales has gradually fallen from 4.3 in January to 4 million in August. Yes, the number of home sales has dropped because there's no inventory. The data also reveals that the average number of houses sold in August has declined by 9% between July. I know, I get it. Zillow, Trulia, and Redfin are all reporting similar consistent trends of fewer homes being sold. Yes, nobody's putting their houses on the market. This is a very big miss for them not to include that in there. Secondly, interest rates are at historic highs. At the end of August, the 30-year fixed was 7.5%, according to Freddie Mac, given the uncertainty surrounding the Fed's monetary plans, blah, 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 blah. Yes, we know. Soaring tax premiums have also put pressure on owned property segment. Okay, you've heard me rant over and over again about housing prices. The prices will ease over the fall and winter. Okay, they will pick up again in the spring, no matter what. This is what happens every year. Almost every single year, this is what happens. I'm going to have my mortgage lender client, Bill Rayman, on the show in about 10 days. And he's going to surprise you with his analysis. He's going to tell you some things that you've never thought of with regard to your primary residence. Has some impact on investment property too, but primarily having to do with your own residence and with what 20-year-olds and 30-year-olds should be doing right now. Anyway, I think you're going to like that show. And if you are even thinking about getting a mortgage in the next 6 months or so, you should call Bill now. His information's down below in the information, in the description. I keep it there permanently. Bill is somebody you want to talk to if you're contemplating a mortgage, if your kids are contemplating, if your grandkids are contemplating a mortgage, they should talk to Bill. He'll help them through the process. Anyway, and he'll get them the best possible deal. Home prices compared to a year earlier may be flat over this period. The year over year might be flat, okay? Month to month, you're not going to see any increases from now on until maybe next April, okay? I mean, sure, there could be a blip, but just in general, it would be weird to see price increases over the winter. All right. Other auto expenses like repair costs, insurance, etc., are more likely to be flat, but at these new elevated rates. All right. Last year, there were no cars and there were no parts, right? Because of what? Oh, the pandemic. Okay. So because there was no parts and there was no cars, insurance companies who were replacing broken cars or totaled cars had to pay a lot more. So then they go back to the insurance regulators when it's time for them to make new rates, and they say, look, we got to have new rates. Look how much money we lost last year. But that is a lagging indicator. Next year, I'm not expecting have you ever seen an insurance rate go down? Oh, that'll be the day. Anyway, so we're not going to see insurance rates go down next year. I'm going to say they're going to be flat, which is going to mean year over year, it's going to be no increase. The rental market, they go on to say the rental market has seen only a marginal increase in prices of 0.13 month over month. Okay, that would be less than 2% for the year. But on an annual basis, the inflation on the rental market is down 1.75%. So this is a negative 1.75%. The increased supply combined with the uncertain economic outlook puts the power in the hands of renters at this point. All right, they wrap up with this. We believe inflation will remain stubborn and even see a marginal increase in the next couple of months before coming down toward the end of the year. We maintain our year-over-year projection of 3.5 to 4% for inflation as reported by the BLS. Okay, finally they say it. So they're saying this is what's going to happen with the Bureau of Labor Statistics number will be at 3.5 to 4%. Headline number at the end of the year. All right, but I think truflation, I will be surprised if truflation goes over 3% anytime ever in the years from now. In the short term, inflation will continue to be driven by the tight labor market and marginal increases in utilities, gasoline, and service-based categories. In addition, with the strong likelihood of one or more interest rate hikes later in the year and a softening in the labor market as a result of an overheated economy, we expect to see a continued drop in consumer confidence. This, in turn, will bring down prices in the housing category and curb consumer spending, helping to keep inflation in check over the long term. I think we will not see this uptick. That's me. And I even think that they would say that they should show more attention. They would even agree with me, pay more attention to the month-over-month information and the 3 and the 6 month trends rather than the year-over-year numbers. And I think the Fed also is doing that. Okay, finally, a couple of things. As to Tesla advertising, I'd love to see them give it a try. I will say it over and over again. I will not lose sleep if they decide not to. I've spent lots and lots of times on this issue in the Elon Musk mission, where I've talked about all the demand levers that they can pull. They've just pulled one of the biggest ones this last week, where they lowered the lease rate to crazy numbers. I mean, I don't need a car. And it was so low, I was like, maybe I should get a Model Y, or Model 3 rather. It was like at $250 a month, maybe I should just do it. Anyway, I've also had, I don't know, at least 4 or 5 episodes that I've done over the last 7, 8, 9 months on what they should do if they were going to advertise, how they should do it, where they should, the Midwest, the Midwest, the Midwest. Don't need to do it on the coasts. You need to advertise in the Midwest. All right. We did a video earlier today that was absolutely well worth the watch. If you haven't seen it yet, Larry Goldberg and I went over the amazing work that he did to analyze the future cash needs of Tesla. Really interesting. You really want to see this. And it clearly shows that Tesla should not do a stock buyback right now, probably not for the next 3 to 5 years. They need that money to grow massively. They're going to grow like a rocket. And they are saying they need $150 billion. That's real money. They need $150 billion to build the factories and to build out all of the tooling and everything they need to do in order to get to, probably well over $1 trillion in sales, I think. Now, the cars themselves might only be 500 billion by the end of the decade, but the semi-trucks might be another 400 billion. And there's all these other categories, energy and stuff. So they need to build factories. They need to keep their money in their pockets right now. I'm going to agree with Larry all the way on that one. Anyway, the card for that one is right here. And then I just want to say it one more time. One more time? No, I'll be saying it every day. Okay, sometimes we don't talk at all. On the Larry show that I just did, we didn't even mention the Cybertruck. This Cybertruck, we didn't mention this one. Comes in this cute box. Come on now. Is that a great box or what? This is amazing. What a gift. Holy mackerel. There's the camo version right over there, huh? You definitely want to get one of these. And they're only $25. Elon Musk even recognized there was a big demand for beer bottle openers because they just came out with this beer, 2 bottles of beer for $150. Who can pass up that deal? And he said, well, we got to have a great looking bottle opener to go with that. So they did this really cool bottle opener, but it's $50. And I think this one's better. So if you think I'm right, or even if you think you should have both, send me $25 to paypal.me /Randy Kirk, all in lowercase letters, $25 a piece. Out of the country, add $20 for freight. Even if you buy 10 of them, even if you buy 100 of them, just add $20 for freight. And if you want to buy lots and lots of, in fact, you know what? I'm going to make a deal today. For those of you who are out of the country, listen to this now. If you're out of the country and you buy 5, I'm going to pay your freight. Okay? You buy 5, I'm going to pay your freight. That's the deal for today. Got to have specials once in a while, right? Okay. So Canada, Mexico, Europe, I don't care. New Zealand, if you buy 5, no freight. All right. In fact, I'm going to do better. I can do better than that. Okay. No, that's probably it. 5 will do. Okay. And then you can join Patreon, where I'm putting up news every single day. Well, not every single day. There was like no news today. None. Zip zero. All week. I'm very, very sad about what's happening in Israel. Very sad about what's going on over there. I cannot believe what's happening on the streets of our cities with regard to some foolish people that are somehow supporting the Hamas in this time. It's beyond my comprehension. But yeah, as a result of the war situation, news has become harder to get. But this next week, I think there's going to be lots and lots of Tesla news, because what's going to happen on Wednesday? Yeah, everybody's going to be talking about that all the way to Wednesday. So remember, tomorrow morning, hit like, hit subscribe, hit notify, because you want to be notified about that show tomorrow morning, where I'm going to give you a list, probably the top 10 things that I want to hear from the executive team at Tesla on Wednesday. If they say these 10 things, and all of them are possible. These are not like, oh yeah, Randy, come on, they're not going to say that. Every one of these things is possible, because in some cases they're just confirming things. If they do what I'm hoping they're going to do on Wednesday, we got it. It's going to happen. 300 by the end of the month. I know a lot of you would think I'm nuts, but what the heck? It's fun. I love making these predictions, even though sometimes I'm wrong, but not as often as you say I am. This has been great talking to you today.